Hello and welcome to Connect and Collaborate. I am Alex Hopkins, your on-air producer, and I'm excited because today we're talking financial services, and I have in studio with me Greg Friedman, and he is with Fidelity Investments. Greg, how are you today?
Great. Thank you for having me.
Yes, of course. But before we get started on our conversation, I'm going to tell our audience real quick to be sure to visit cobrt.com, check out our events page to see our events as well as our partners' events, and don't forget to sign up for our newsletter, which will be out tomorrow, but also comes on every Tuesday. So be sure to get that, and also check out this podcast and more at cobrt.com/radio-podcast. So again, welcome, Greg.
Thank you.
Yes. So let's talk about your background. How did you get started in finance? And let's start with where you wanted to go in college and what your dreams were.
Well, I had the ever popular financial services start of a history major and a poli-sci minor, followed by a music minor. So they weren't the natural courses for financial services. So I went to law school for a year. Quickly discovered that it wasn't what I was hoping for, and I wasn't practically that good at it either. So when I decided to leave, the administration, let's put it this way, did not run down the street chasing me back. So I went to my second passion, which was financial services. I started at a firm called Barclays Global Investors out of San Francisco, owned by Barclays Bank out of London, and began my trade there, worked my way through a lot of different positions until I started managing international equity index funds. And I was fortunate enough to start the very first international ETFs called WEBs, and that's when ETFs were very, very new. It was in '96. The first ETF was established in 1993, and I was fortunate to cut my teeth on that and was one of the first 5 people to help start the business called iShares that we see today, which is the largest ETF business in the U.S. for, at this time now, BlackRock bought Barclays Global Investors. And Fidelity called me 5 years ago and said, hey, would you help start and run our ETF initiative here at Fidelity? So here I am.
Fantastic. So you keep mentioning this ETF, which stands for Exchange Traded Funds. And I mentioned this off air to you, but I have zero knowledge of financial services, and I pay my bills and I feel good about it, and that's the extent of my knowledge. So can you give us a little background of exactly what ETF is?
Sure. The financial service is a way of overcomplicating a lot of different things. ETF is a term for exchange traded fund. And the way you think about it, it's a basket of stocks, not dissimilar to a mutual fund, where today people buy mutual funds through their broker dealer, in this case Fidelity, through our broker dealer. An exchange traded fund is very similar. It's a basket of securities that are held in a portfolio, but the difference is they just trade on an exchange like a stock. So as you would trade IBM or Ford or GE or Apple, I'm showing my age by going through the blue chips, but we'll go through Apple, Google, etc. You're buying that on an exchange. You buy this basket of stocks called an ETF the same way.
Okay, so is it similar to buying stocks? Does it go up and down like a stock would?
Correct. Now, all financial instruments, a mutual fund goes up and down throughout the day. So if you have a mutual fund and you hold, say, 10 names in it, that mutual fund will rise or fall based upon the stocks in that mutual fund. The ETF has a similar type of dynamic, but there's an extra component that it buys on an exchange. So if it goes up and down during the day, you buy it just as you would a normal stock. You buy in your brokerage account. Okay. You can buy it a margin. You can trade it in different strategies. You're trading, instead of a single name, you're trading a basket of names.
Okay, interesting. Thank you. That is so. This is your life, right? This is what you are great at doing, and so I'm imagining sort of a Wolf of Wall Street type of environment. Is that too far off?
Well, we don't portray and condone the behavior in the Wolf of Wall Street movie.
That is fair.
But we are, heavily engaged with clients, with the trading community. So our mutual fund trades, within Fidelity, and you buy it through Fidelity. The ETF is a little bit different because you trade on an exchange. So we're dealing with market makers, traders, exchanges. So it's a little bit different. But as a whole, we're really focused on producing products that benefit our client, that solve their investing needs, and help them achieve their investment goals.
Fantastic. So I know that Fidelity Investments, particularly in the Denver market, is very client-focused. But I would imagine that not so much on your day-to-day work.
Correct. We have about 800 people here in the Denver, Colorado region. About 650 are in our contact center down in Greenwood Village, really focused on how to service the client, from individuals to advisors to high net worth. How do we service a client? How do we help them get their needs? We also have 5 what we call retail branches here in the Colorado region that are focused for clients that want to come in, get that personalized help, talk to their advisor, and get that advice that they need. And those branches are throughout Colorado: Broomfield, downtown, Cherry Creek, Lone Tree, and Colorado Springs.
Okay.
So that's really where we service clients the most effectively as well, beyond the phone set. Then there's a smaller group, which is where I'm part of, is part of asset management. So we're actually managing money, looking over portfolios, creating strategies that are then used by those clients that are serviced. So as a whole, we have 800 people here in the Denver region.
Wow. That's quite a big market for you guys.
It is. I mean, we started the call center in June 2013 when we opened it. So in 5 years, almost 5 years to the day, we've got 800 people now here in the Denver region, really supportive of a larger financial services community that's building in the Denver region as well.
Awesome. So I would like to talk a little bit about best business practices that you've seen. Obviously, you have a little bit of a background in finance, despite that minor in, poli-sci and
music.
And music. So best business practices that you've seen. So that being, what have you seen be successful?
I think if you're doing the right thing for the right reason, you'll always be successful. I've been in this industry, and I've seen a lot through all the Wall Street firms. You see the news, you watch the movies that you reference that we don't endorse, and you see how firms react and what's their priority. Fidelity is unique in that we're really focused on the client. And people say that all the time, but I've been here 5 years, and I can say I've never seen a firm so conscientious about doing the right thing for the employees, and doing the right thing for the client. So if you do that as your overarching goal, you'll always be successful because you're doing the right thing. So at Fidelity, we're focused on making sure we're delivering the best product, that we have the best client service, that we're servicing the clients correctly, that they are having a good experience. Because if you have a good experience, you'll come back. And that's the overarching theme. If you can do it right with the right mindset, you're always doing the right.
I like that. If you do it right with the right mindset, you're always doing it right. So let's talk about this Denver investment services sector.
Yes, it's growing quickly. It's grown 28% over the last 5 years. So it's tremendous growth that since I've been here in Denver and since Fidelity's been here. There's over 31,000 employees in the Denver region servicing financial services. We're the 5th largest financial services city in the U.S. A little known fact. The big ones, obviously, New York, Boston, Chicago, and San Francisco. But we're growing at a greater clip. So at some point, down the road, not that far, we could be the number 4. So we have a tremendous amount of firms. We have ourselves, Charles Schwab, Great West, Oppenheimer, Alps, Janus, and the list goes on. So Denver is a site that people are looking at, that want to move people, investment professionals, to Denver for a lot of different reasons. But they're trying to get out of the big hubs. It's expensive to live in New York or San Francisco, my hometown, Boston. So where can we go where we get good talent, good weather, people want to be, easy for transportation, communications, and Denver is a key site for that.
I personally love Denver. I'm not a native. I've been here for about 8 years myself, and I've seen the growth. It's been exponential. But I'm also trying to keep people out because of the traffic. We definitely have had a few guests on to talk about the traffic, but it is exciting. Yeah, that is something that I don't think a lot of people know, is how big the financial services industry is in Denver. What are the challenges in this market that might be different from San Francisco or Chicago?
It's just, getting people aware of financial services. Now, the unemployment rate, obviously in Colorado, 2.9, an all-time low. So it's, the talent pool's tight. So we're coming into a talent pool that's tight, but the environment's changing as we see Denver grow in terms of the arts, people moving from the different coasts. This is a hub, great universities around, great educational pools. This is the talent base that we're looking for. So the challenge for us is, how do we grow smart? How do we tap that talent pool? It's a tight job market, so how do you get the best that you can? And we're lucky because, Fidelity's a great firm. Financial services is a great career, so we're getting a lot of good people. And as people move from the different coasts, and we hear it all the time, firms in New York are saying, I want to relocate, I want to diversify, I want to get out of the cost center of New York, the commute. Denver is on the top of the list with 4 or 5 other cities, but we are really attractive right now.
That's super exciting for you. Yeah. So let's talk about community involvement, right? Because you talked about tapping into this tight talent pool that we've got here, and I know that there's a lot of colleges that are trying to get their students into
Correct.
these different institutions. So is there any community involvement here with colleges or universities?
We do a lot of work with CU, with CSU, educational days. So, we're part of that community, educating them on what financial services are. How do you get into a job? How do you get a career? What does a career look like? And part of what we bring in asset management out here is now we've got the client service part at the center, we've got the branches, and now we've got asset management, creating our own little talent pool and career projection here in the Denver region as well as others.
I love that. So what else? Are there any other community projects that you guys are involved in to give back to the Denver community?
We're highly involved. I mean, Fidelity,
Yeah.
as we talk about doing the right thing for the right reason, we're hugely supportive of community events. We have 38% of our employees do community events. We're linked to the Boys and Girls Club, Junior Achievement, Young Americans for Financial Education, the Food Bank for the Rockies, Urban Peak, and our partner school, Fairview Elementary, right by Mile Hall Stadium, are huge partners for us, and we spend days each year supporting that. We do holiday events. We do summer cleanups. I mean, my group last year alone, we cleaned the yards of some senior citizens around the city that needed help, that couldn't afford yard service. So something we love doing. Mm-hmm. It's something that's core to our principles of who we are and fits our values extremely well.
Yeah, and I love that you're going individually, right? It's not just, you're not just giving money to a nonprofit and calling and shaking hands with each other saying you've done a good job giving back, right? You're actually getting out and doing things. It's beautiful. I love that. So there's one hot topic that I know a lot of our listeners have been interested in, and it's this cryptocurrency. I know that you're in ETF, so it's not the same. But any comments on that you would like to share?
It's an interesting space. You hear a lot of news about it. People are talking about it. It's a new asset class. It's a different type of asset class. At Fidelity, we're doing a lot of work, a lot of research. We've got a lot of smart people thinking about what does it mean, how do you think about it, how do you invest in it, how you protect. Once again, how you protect our investors. Mm-hmm. We don't have any products currently in this space. I'm not sure when we will, if we will.
Yeah.
We will only do it if we know it's the right thing for our clients and our customers. But we do spend a lot of time researching and thinking about it.
Wonderful. Do you get a lot of queries about it from customers?
Oh, absolutely. I'm on the phone a lot with not customers, but with people that are in the space that are looking to how do we create a tradable product that captures this asset class. So we're doing a lot of thinking. I personally and my team and I are doing a lot of thinking about it, but we're not ready yet, and I don't think the space is ready yet to bring this product out.
Well, and it's definitely first of all, it's a difficult concept to wrap your head around.
Oh, very much.
Yeah, absolutely. So I'd imagine a lot of institutions are taking their time doing solid research on it before they roll anything out to their clients.
Oh, no, I mean, just the fact you have to try to explain what a cybercurrency is.
Yeah.
And, once again, showing my age, I'm not that old, but you're used to having the U.S. dollar, having gold behind the dollar.
Right.
There's no more gold behind the dollar, and even that, if you start explaining to people, gets their head spinning a bit. And then you try to go to a cryptocurrency, and there's really nothing but a computer mining.
Yeah.
It's a tough concept.
It is definitely a tough concept. So as far as other services that you provide with the ETF, what's your favorite? What's your baby that you've got, so to speak?
As with your own children, you don't have your favorite.
My mom would disagree. I'm clearly the favorite.
Of course. Just mention it's perfectly clear. It's how do we create a family of products? So, in my previous jobs and previous roles, we push the ETF because it's a different way of investing. How do we make the advisor smarter? How do we make the client better? And at Fidelity, our focus is how do we bring the best of Fidelity into an ETF form? Fidelity's been known for 80 plus years in terms of our investment capabilities, our fundamental research, our excess returns, and our star managers. And those are still important to Fidelity, but Fidelity recognizes that the investment community has changed. People are looking at ETFs, more personalized investing solutions, different strategies, models. So the investment universe has changed dramatically over the last 20 years, and ETFs play a part in it. They're not the whole, but a part. So our goal is how do we help Fidelity change the way they do business? How do we bring that same fundamental research and expertise that Fidelity brings into an ETF form? So as we're thinking about our ETF strategy, it's really focused on, I'll throw another term out to you, smart beta. or active investing. That's where we can add value, and our goal is really how to bring value, innovation to our clients into a new wrapper, an ETF wrapper.
Okay. So let me ask you this, and by all means, if it's not something you want to give me advice on, I completely understand. But for someone like myself, right, I know that I have money to invest. I don't know where to start. Where would I go with Fidelity to get my bearings?
The best place is either go to a branch at the 5 branches I talked about, walk in, make an appointment, and there's experts there that will help you, with what are your goals?
Okay.
What's your aspirations? What's your risk tolerance? Or you can call the 800 number and talk to a slew of experts based upon your location and what you want to do, asking the same questions. How much money do you have? What's your horizon? What's your goal? What's your future? How much risk do you want to take? And they'll help you get into different products or different packages that will reach your investment goals.
Yeah, I want to take zero risk. That's
well, that's called the mattress, which is not going to get you very far in terms of returns. But there are options that you have, that all investors have, depending upon what they want to do.
Yeah, I love that. So any current projects that you have going on with Fidelity right now that you want to touch on?
No, we're excited. We started this ETF initiative about 5 years ago. We have 23 products, over $10 billion in assets. So it's not a huge amount, but coming from about 5-year start, I think we're pleased where we are. We can continue to roll out new products over the next few years that adds solutions and strategies for our customers in terms of the smart beta space, and really harnessing that fundamental research that Fidelity's been known for the last 70 years into an ETF form. So it's exciting. I think if you look at the horizon as a whole investing, there's a lot of debate around mutual funds versus ETFs. The old school, so you have to have a mutual fund. The newer investor, the millennial investors, are more towards an ETF or more personalized. And I think the right answer for investors is both. You don't need the argument of mutual funds versus ETFs. It's both. A portfolio should be well-rounded. It should be diversified with different products, different asset classes. And that's kind of what we're trying to bring out Fidelity is, mutual funds are still important, but you now have a personalization option. How do you personalize your portfolio? So it's not just buying, I guess another way of looking at it is the single ticker sale where you bought Ford, or you bought GM, or you bought a single ticker of a mutual fund. Those days are fading. People want solutions and strategies. Give me a model. How do I think about this? So I think that's where the world's going, and Fidelity is taking the charge as a leader in that space. But that's, I think, holistically, I want people to start thinking about is the way you used to do it is still workable, but there's a better way now.
Yes, lovely. How about in the future? Where are we going with this ETF? Do we have set goals in mind, and what do those look like?
Well, the ETF will continue to develop. Still have different asset classes, different types of products. You'll still have, there's 1,700 ETFs in the U.S. right now, so there's a lot. I think you'll start seeing more towards active, because historically ETFs have been passive or index-driven. You've now got some active in fixed income. I think the next evolution will be active in equity space. But I think the overarching theme is going to be personalization again. How do you get onto a website and say, these are my goals, this is how I feel, or different models? And people talk about models being, I don't understand a model. A model is, I want aggressive growth, or whatever terminology you want to use. And there's different ways of packaging these components. So the ETF act as a component piece to a larger model. I like international, or I like high yield, or I like sectors. How do I put these building blocks together? So you're not buying one product anymore that's supposed to solve that. You have the personalization option to choose these different models with the different building blocks. Okay.
What does your ideal overall goal look like for ETF?
It's what we started. When we started ETFs back in my previous shop, it was, we can do this better. How do we make the advisor smarter? The old way of investing back in the 90s wasn't always in the best interest of customers. So there was a lot of changes. ETFs were part of it. I can't say we were the catalyst or the main reason, but it was how to make investors smarter, more aware, and how to make the advisor smarter and more aware. And I think that's really my goal. How do you change the world? A little bit of investing. It's not about assets. It's not about AUM. It's not about how we perform. Are we doing the right thing, and can we make people's lives different and better because of it? And that's fun, because that's a mission to wake up to. It's not fun to wake up and say, God, I outperformed the S&P by 3%. It's nice, but it's not thrilling. it's thrilling to know that you changed the industry and you changed the way people think about it, and you're making investing easier. It's no surprise. If you look at the ETF users, they're younger. They're the millennials, which I clearly don't understand some days.
What do you mean?
I was pretty excited. I got PayPal working, and they told me that was about 10 years ago. And I was pretty proud of myself. I had my phone. I paid my bills.
Yeah.
So the millennials are asking for things different. It's a women investor. It's the millennials. It's I want more control. I want more transparency. I want to be able to know what's going on in my portfolio versus this hidden, behind the wall shield of here's a mutual fund, trust us.
Yeah.
Still works, still place for it, still a lot of customers don't want it, and it's still our cornerstone of what we do at Fidelity. But now there's other options, and there's other ways of investing, and that's what's exciting, is how do you create an industry and a way for investors to create wealth for themselves.
Yeah, I dig it. So let me ask you about your favorite success story that you've seen from perhaps somebody like myself or a different investment person that you've talked with on this asset management. What's been your favorite success story?
I think it's the satisfaction that's changed. When I started doing ETFs and managing the first ones, that was 1996. There was maybe 25, 30 people in the U.S. The new one an ETF was. We were the new kid in the block. If something went wrong, we were always the finger pointed at, why did it go wrong? And now if you look at the ETF industry, it's huge. 35% or more of all traded volume on the New York Stock Exchange every day are ETFs. There's over 1,700 ETFs in the U.S., probably equal amount around the world. Every exchange around the world has an ETF. And that's what's exciting. It's, once again, it's not individual fund returns or how I performed against the S&P 500. It was that we were part of something that changed the industry. Now, people can buy ETFs, choose their own asset allocation, choose their own strategies, have the flexibility, and the ETF's not going away anymore. It's to a point now where every asset manager either has an ETF or it's developing a strategy around how to bring out an ETF business. We have conferences that draw 3,000 people. We're on CNBC. We're mainstream investment now, where in 1996 there was a handful of products and about 30 of us the new one ETF was. So that's what's exciting. It's being part of a change, but being part of a change for the right reason. How do we make things better? Once again, I go back to the same line, making the advisor better, making the individual better, and that's what's fun.
Yeah. So I'm going to walk with you through a scenario here. You wake up tomorrow morning, you buy a lottery ticket, and you win. 2 questions. First of all, do you keep your job? And second of all, what are you going to invest with some of that money invest into?
Oh, if it's a $100 lottery ticket, I'm still working, obviously.
Oh, you win the Powerball.
Okay.
Fair. I like that you questioned it.
Yeah, it's a fair question.
Yes, absolutely.
Obviously, I'll work for a little bit because I do love what I do. Once again, it's not about my salary or performance. It's, can I make a difference and am I helping others? So I'll work for a little bit. Definitely invest into a basket of ETFs, create my own asset allocation. Might change now, might not be as aggressive, might be a little more passive in terms of the fixed income versus equity mix to protect my winnings. I wouldn't change a whole lot.
Really? You do seem very passionate about your career, which is definitely nice to see. So how can people get a hold of you, Greg? If I am trying to get into this ETF, I don't know that I would work with you directly, right? You mentioned going to a branch. Who would reach out to you?
Not a whole lot of people, because I'm in charge of the initiative for Fidelity.
Okay.
So I don't have day-to-day contact with customers or individuals. Once again, the best way is to go to a branch, call the 800 number of Fidelity, look at the Fidelity.com website. It has a tremendous amount of tools at your fingertips. You can sign up for a brokerage account. You can get advice for online. So there's different ways, and depending upon what type of client you are and what your needs are, a lot of options to get hold of Fidelity and get help.
Thank you so much, Greg. It's been an honor having you on today. We appreciate it, talking financial services. Be sure to check out this show and more at cobrt.com/radio-podcast. And like and subscribe our YouTube page. Thank you so much. Thanks, Greg.
Thank you very much.